Good day. Today I'm going to continue about discussions of accounting for nonprofit organizations or NPOs. So remember last time we introduced the organization, we said that a nonprofit organization is basically a non-stock corporation that is not organized primarily for profit purposes. So it can be in any form of organization. It could be, for example, college or university or school. It could be a voluntary health and welfare organization. It could be a hospital, for examples, and so many things. Could be social, civic, could be religious, literary, scientific, could be sorority, fraternal type of organizations. So to continue with these discussions, allow me to go to the sample financial statements then. So hopefully the financial statements will be visible in your end. All right, so here is the statement of financial position. And you can notice the components. This is a comparative presentation actually because we have 2 years. So from assets, current and non-current liabilities, we have current and non-current. It's not subdivided though, but it is suggested to really differentiate the components as well as the assets, current and non-current. I would suggest this has to be improved. Liabilities, current and non-current, but the highlight here is on the net assets. So as what I've said in the first edition or first part of this series, that the net assets is synonymous basically to capital, equity, or net worth. So these terms are similar. For the NPOs though, or for the, again, those are synonymous terms, and then these are the net assets components from unrestricted, temporarily restricted, and permanently restricted. Then another one is statement of activities, which is again the combination of the statement of comprehensive income and the statement of changes in equity. So for the unrestricted net assets, you have here the changes. Remember, what will change our net income or profit or loss? That would be the revenues and gains, less, of course, the direct cost or the cost of sales, and so on. Then you have here the net assets released from restrictions. So remember, if the temporarily restricted net assets time and use restrictions have been lapsed or fulfilled respectively, so these temporarily restricted net assets as well as the restrictions would have to be released, and there will be a reclassification from such to unrestricted. That's why it is a plus here. And we get the total of unrestricted revenues, gains, and other support, less the expenses and losses. That would be the increase in unrestricted net assets in this case. So meaning to say this is profit for this particular year. Then before I continue, I would say though, what is lacking here is the heading. Do we have heading? We don't have heading. So heading is very important. Anyhow, here are the items also for the changes in temporarily restricted net assets. So these are now like the components of the changes in equity. So we have what actually changes them. So contributions, the income on investments, and the release for temporarily restricted net assets. For permanently, the contributions, and then we have what is stacking here could be some items, right? Because we don't have here like an amount that would result to 11,325. So there must be something here that is missing to result to increase. And then 11,325. All right, so this means that for the permanently restricted net assets, It's just the contributions that change. And then 11,325 is the combination of the following values: increase in unrestricted net assets plus 375 plus 5,000 equals 11,325. So these are the total increases in net assets. Plus the net assets at the beginning of the year equals the net assets at the end of the year, $63,425. So these items are already discussed a while ago while I discussed the different sections. Then another one or another financial statement is statement of cash flow. So you have here cash flows from operating, investing, and financing. So from operating activities, so here are the changes. So please refer to separate discussions for statement of cash flows for the items that would be placed here specifically. So for the operating activities, we have here the net income on the top, and then some adjustments at the bottom for the non-cash expenses and for the changes in working capital. And also for the non-cash income or gain, they have to be deducted. So again, refer to statement of cash flows deductions for review of the rulings. And then this is indirect method because we used the net income as our basis from accrual to cash basis, while for investing and financing, always direct method. So the differentiation of direct versus indirect method is on the computation of cash flows from operating activities. Then we have to take note that in operating activities, we include the changes in working capital, current assets, and current liabilities. In investing activities, non-current assets. In financing activities, we have the liabilities and the equity. Exception for short-term liabilities that will be under financing will be the short-term notes or loans payable coming from borrowings. So for example, we borrow money from the banks. All right. So another one is statement of functional expenses, which is actually something that is required, which is a separate financial statement for voluntary health and welfare organizations. So expenses are reported on the statement of activities, and then as reported, they will have to show details on this statement. So you can see this tabular presentation here in which we would be seeing the details. Then the total are actually being broken down into different items under program and supporting services. These are the two functions, remember? So we have community service, recreation programs. So these are the programs by which this particular NPO are basically into. Then we have the supporting services, we have the fundraising, and the management and general. All right. So to continue, we have the hospitals and other healthcare. So this particularly applies to still nonprofit organizations, but they are now into hospitals and healthcare. And then they are non-governmental. For example, so we have to know if, let's say, they're private, but still not for profit. Otherwise, if they're for profit, so we have to apply the rulings under international financial reporting standards, especially in the Philippines. While for government, we have to follow the rulings of Commission on Audit for the national government accounting systems. We have to follow the rules of the government. And then we also have to apply, if not for profit, the guidelines under this particular topic. All right, so revenues and other receipts could be unrestricted. So just like again with the revenues of the other NPOs, I think this is not something new. Then temporarily or permanently restricted. For unrestricted, because we're talking about hospitals, so the revenues would be coming from the patients. And then we have to deduct discounts and any contractual adjustments. Then premium fees, for example, subscriber or capitation. So let's say we have like members and they will be getting some, or we will be receiving some fees from them. Then also, for example, if we offer other items like there would be some cafeterias or gift shops, in-room TV or phone, will we get some subscription fees, part of the fees to be charged to our customers, then tuition. And then the non-operating gains, the gifts and bequests. So also these items are on the temporarily or permanently restricted items. Then hospital expenses would be classified by function. So here are the classifications for each function, from nursing services, other professional, general, fiscal, administrative, medical malpractice costs. Can you just imagine this particular account title, right? That there would be expenses immediately, provision for bad debts, you know this one. For the accounts that deemed uncollectible, we estimate a portion of that, then depreciation expense. So here are some examples of our journal entry. So we actually have discussed this in other portions, but we can again review. We said that for the revenue account, we can be very specific. We don't have to limit ourselves with the account titles. Again, lifting from IAS 1. And then we attach the words normally unrestricted, temporarily restricted, permanently restricted to the revenue accounts in order to differentiate from each other. So for the first one, this is for the billing to the customer, then at gross amount. Next would be if we now charge to the patient bill the full amount. So we have to deduct the contra revenue accounts to the receivable. So we have the courtesy discounts and the contractual adjustments. Then another one is for the uncollectible portion. So you know this one, debit the expense, credit the allowances. Contractual adjustments could be, for example, coming from Medicare or field health charges. Next, for cash contributions, so we have here to debit cash, and then we will be crediting the revenue accounts. So example, we have a support here, which is temporarily restricted. It's not stated here as to what type of restriction that is. Is that time or purpose or use? Purpose, by the way, is the same as use. That's why I said an or. But anyway, we will be seeing such later on other problems, or we'll just assume it is with certain restriction. And take note again, it should be externally imposed. Then nursing services expenses, payment with cash. Then for this one, this is reclassification. So a release from temporarily restricted out, and then plus to unrestricted before we pay for the nursing services. So the story again here is that we have received these particular items. Then because we have to pay nursing services expenses, so we have to release first to temporarily restricted net asset before to the nursing services expense. Then receive donated assets or services similar to the first part, that we have to record this one for non-cash assets at fair value, then credit the revenue account. This is in the form of support. It can also be like contributions revenue dash unrestricted if we would like to. Then on the other hand, if for example, the services are donated, so we will simply debit the expense, and instead of paying it by cash or any other non-cash asset, then we have to consider crediting revenue because this is in the form of donation. All right. Next are the hospital financial statements that we have to prepare. So as said, we have the statement of financial position. Oh, it's not here, but we have the statement of financial position. Then the statement of operations instead of the statement of comprehensive income, or the income statement plus the other comprehensive income. Then we have the statement of changes in net assets, meaning we do not combine the two. So separate items, changes in net assets, which would be the counterpart of statement of changes in equity. Then, of course, you have plus statement of net assets, right? Then statement of cash flows. Then also the notes to financial statements. Okay. The changes in net assets would show the changes in unrestricted, temporarily restricted, and permanently restricted. So here are some examples of the financial statements for the hospitals. So again, this is the statement of operations. We have the profit or loss at the bottom. So revenues minus expenses and losses would be the profit or loss. Then these are the changes in net assets for the hospital. So here are the three components of the net assets, and here are the items to get the ending balances. So we will be seeing here the details for the net assets. All right, so that's the end for the healthcare and hospitals or other healthcare and hospitals. Next would be for colleges and universities. So similarly, again, we have to identify if not for profit or for profit. If for profit, and especially that's private, so we have to make use of IFRSs. On another occasion, if, for example, they are non-governmental but not for profit, so we have to follow the guidelines of this chapter. But if governmental, non-for-profit, so we have to consider also, in addition to this particular standard by FASB, then we follow also the guidelines by the government. So tuition and scholarships, we have tuition fees, main sources of income of colleges, universities, and schools. Then we have to record the revenue at gross amount. Then we have to deduct the contra revenues later on. Example would be the discounts and the non-employment fellowships. So scholarships also can be considered, and they can also reduce the revenues from the company. So if from outside sources, we have to collect the accounts receivable from the donor itself or himself or herself. If awarded by the college itself, so we have to reduce the accounts receivable. So that's why I said a while ago, this would reduce on the collection, not necessarily the revenue though. So it's on the receivable. So debit the expenses, education and general student aid, and then we will credit the receivable. And here are the functional expenses of the college. We don't have to necessarily memorize, because anyway, in real life, we can just refer to these classifications. Then here are some journalized transactions. So we have the revenues again on account. Then this would be the aids to students, discounts given by the university. So we are going to debit the tuition fee as reduced, then credit accounts receivable. Then the third would be for our allowances. So this would be for uncollectible portion or the bad debts. Then to continue, we have the appropriations here as received. So this is coming from the government or state and with no restriction. So for general operations, and then the college board has the ability to designate the fund. I said again, if the funds are board designated, when we say the board, we mean the board of directors, or if this is an NPO, so board of trustees or regents. So in that case, that would be unrestricted. If externally imposed, so that would be under temporarily or permanently restricted. So I have to re-emphasize those items again because sometimes those are forgotten. Then funds held for students, in this case, so income, and then for items which are really income. But if the funds are being held in fiduciary capacity, if you can recall, I mentioned about that, like the NPO here, university or school or college, is acting like an agent, a trustee in behalf of a trustor in a trust agreement. So This grant funds held for students would be liability accounts. Then when the time is right, or when, of course, students will have to get the money from the school, so it will be simply a reversal of the previous entry. Then a note here, if some of those funds are applied to student accounts, then the second entry would credit accounts receivable rather than cash. Yeah, that's true though. So example, there's the fund that is being held for students, but of course they can be applied on their tuition fee, so we can deduct the collectibles of the NPO. The next would be the endowments. Normally, the endowments are permanently restricted, especially if they're permanent endowment. And then that's why that's the first entry. So to continue, what if there is a receipt of income on endowment? Probably there has been a restriction that is imposed on that. So that's why it is like this. And then if, for example, this is to be used for our payment for expenses for the student aid. So in other words, this is like a form of support for the tuition fees of students. So that's why we have to release first $3 or pesos here from temporarily restricted, that's the out, and the in to unrestricted before we are going to pay the expenses by debiting expenses credit cash. All right, then for auxiliary services, we have here the revenues from it and then the payment of expenses. So, of course, because they are part of the operation, so they have to form part of the statement of activities. This is college and university, so statement of activities combined form of the statement of operations and statement of changes in net assets, or for profit organizations, that is statement of comprehensive income and statement of changes in equity. Subsidiary records are maintained. All right, and here are the sample financial statements for the college. So similarly with the other organizations, statement of activities showing the net increase, the profit or loss, then the changes in both temporarily and permanently restricted net assets. Then that's it, or that's the end of our presentation or report. And hopefully you have learned something from this session. Thank you and God bless us, guys.